Hello everybody, Lee Rowland here, Cumbrand's Mortgage Man with episode 3 of Insurances Made Simple. See, I tried to make a joke there, it wasn't very funny. Just a quick one to cover myself. This is a simplified version of insurance and protection products. Tried to be explained in a manner which everybody will understand. So I'm not going to be going into minute detail about policies. So that's the point, and I've just got to cover myself. So today I'm going to talk to you about life insurance. As I said in episode 2, although I'm a mortgage advisor, my job is also to protect my clients and their families for every eventuality. And when I say protect, what I really mean is make sure they've got insurance products which protect them. So today we're going to be talking about life insurance specifically. Probably seen loads of adverts on the television. I get loads of ex-sports people saying, oh, I wish I knew then what I knew now. And you've seen them on the telly, I suppose, 64p a day for 100 grand's worth of cover. So that's life insurance, that's the advert. So that's what they're talking about. I'm not going to comment on the marketing, really, it's not my place, but there we go. Right, so onto it. So what is life insurance? Well, in a nutshell, it is what it says it is. You pay a premium to the insurance company, and then when you pass away, the insurance company then pays that amount out. It's literally as simple as that. There are different add-ons to different policies, and you can, on some policies, get paid monthly rather than have a large payout. But normally you would have a payout for whatever you've been insured for. And so how does it work? Well, life insurance, you don't have to have a mortgage. As I said in episode 2, let's talk mortgages firstly though, because that's probably my comfort zone. So let's go back here, right? So got a mortgage for 100 grand over 25 years. And then you want to cover yourself in the eventuality that you die and the mortgage is still running. So that would be a decrease in policy, right? Say you're on your own, single mortgage, then what would happen is you pass away and then basically the mortgage would get paid off and no debt would go into your estate for whoever's going to manage the estate. If you were on a joint mortgage, you could have there's loads of policies. I'm just going to give you an example of joint, and then it pays out on the first death. So unfortunately your partner's died. As soon as your partner dies, the mortgage is paid off and you're mortgage free. Okay. In some situations you might have 2 individual policies, because sometimes you get twice the cover for a little bit more per month, but it just makes sense to do it that way. So the policy keeps running. With some providers, you can have it, the first person might die and the second one keeps going anyway. Loads of variations, but trying not to overcomplicate things. So just quickly, you can have terminal illness included in most life insurance policies. So if you're diagnosed with a terminal illness, it'll pay out earlier than when you die. Let's not get this confused with critical illness, because I've had a couple of clients who said, yeah, Lee, I got critical illness, don't need it. I said, oh, where's your policy? Oh, it's £12 a month. I'm like, hang on. Don't really get much critical illness for £12 a month. Looked into it. It's a life insurance policy with terminal illness built into it. And critical illness policies are a lot more complicated. And we'll be discussing them in episode 4. So look out for that one. So what happens? So then that's the decrease in policy. So then you've also got level policies as well. So say, for example, you had a mortgage for 100 grand, which you're going to be paying off. You want to keep that 100,000 all the way through the mortgage. So if the mortgage is paid off, you can have a little bit of a buffer, which can go towards other things, living costs, etc., after the other person dies. And so that would be called a level term policy. Once again, you can have an individual, you can have joint, first death, and it depends on a number of reasons, really. But forget the mortgage now. Just think about yourself. You might want 500 grand's worth of cover because you've got to pay a load of stuff off. And then you want your family to live comfortably for a while once you've gone. So you just come to me and say, look, Lee, I want 500 grand's worth of cover, please, over 25 years or for as long as you can do it. There are whole of life policies as well, which you can do, which will definitely pay out. We might discuss them later on. This is just your basic life insurance policy, this is. So what happens when the money gets paid out, Lee? Does it, what happens to it? Well, we normally put them in what's called a trust. So you sign up a trust form and you name your beneficiaries. So then the insurance policy, instead of going back into your estate, the insurance and messing about with probate and all that, it goes straight in to the trust, and the trust will then pay it out nice and quickly. So it's just about working out how much you want and how much you need and how much you can afford. Once again, life insurance is not expensive. It is pretty cheap for what you get. As I said in episode 2, it depends on your age, medical history, and it also depends on your BMI, a few other things as well. But ordinarily, it is not expensive at all. And you can get a decent amount of cover for less than your mobile phone bill by a mile. So it is really worth considering. I don't do many life insurances on their own. Normally, I've got an element of critical illness built into it, because, and we'll discuss them next week. So why would you use a broker to do it and not just click on the link with the sports people? Or why would you, or the 64p a day one? Well, they're not going to know you, are they? They're not going to be able to tailor the policy to your needs. They're just going to bang out the life insurance, say, yeah, okay, that's a tenner a month, and you've just got it sitting there. Don't really know what it does. You don't know what the additional benefits are. You might not even know the terminal illness was in there. Terminal illness in there. You might have other add-ons in there as well. Some companies have different things about emotional and physical support and whatever else, packages built in, which especially now with COVID and the NHS sort of situation, you could take advantage of them more often. And what happens if, it's a joint policy, one person dies and that person there's got to sort out funerals, got to sort out flowers, sort out children, sort out whatever. The last thing you want to do is mess around with insurance policy. You should just come back to your advisor. And any advisor worth his salt should be there to support you and help you claim. And that's why you go into I know it's me and a broker or a local advisor who you trust. Once again, good relationship, can help if the worst does happen. So that's a little roundup on life insurance. Loads more in there about life insurance, to be honest with you, but I tried to simplify it. Give me a call, give me a text, give me a message if you would like to discuss it further. Thank you very much and speak to you soon.